Hey guys, welcome to Fiscal Voyage. I'm Felix. Wondering if Aflac is a good buy right now? In 5 minutes, I'm gonna let you know it's either buy, hold, or sell. Coming right up.
All right, so here's the Aflac 5 minute review. You can find Aflac in the New York Stock Exchange as AFL. The company was founded in 1955. I'm sure you guys are familiar with the duck, the commercial of Aflac. Funny duck. Uh, Aflac is an American insurance company and is the largest provider of supplemental insurance in the United States. It underwrites a wide range of insurance policy but it's known for its payroll deduction insurance coverage, which pays cash benefits when a policyholder has a coverage accident or illness. All right, so let's get right to its fundamentals. Revenue grew at a compound rate of 4.34% from 2007 to 2016, which is really good actually for Aflac. Uh, Net income grew at 5.56% in that same time period, which is excellent. Um, and the share count has been decreasing since 2010. And they currently have a rating, credit rating of A minus, which is really good. Um, let's go continue with the fundamentals. 2016 earnings saw a earnings of $6.42. They currently have a dividend yield at 2%, and dividend payout ratio of 25%. Their 5 year dividend average is 2.3%. So they tend to not have such a high dividend yield. Net margin in 2016 was 11.79, and it actually been decreasing from 2015. However, the 12 trailing 12 months is a bit higher compared to 2016. The debt to cap ratio is excellent at 18%. They do have a 5 year dividend growth rate of 5.4%, which is good, not great. It does beat inflation. They have a Crowder rule of 7.4, which is a 5 year dividend growth rate plus the current yield, which is also not great. Tend to I tend to look for companies between a score of 11 or 12 Crowder rules. They have a great dividend growth history of 35 years, and actually their last increase was 4.65%. I actually see them continually that growth rate of 4%, maybe even lower, maybe at the rate of inflation, 2 to 3% the next couple of years. And the future outlook looks good and not so good. Um, for 2017, they are expected to have earnings of $6.72, which is higher than 2016 earnings of 6.42. And 2018, they continue that growth to $6.85. CFRA has a 3 year projected earnings growth of 2%, which is not great. Um, we'd like to see it more at 4 or 5% earnings growth. Their forward PE is at 13.2 versus their 5 year average of 10, which is mean that currently you're paying higher for Aflac, for shares of Aflac versus the 5 year average. Now let's look at the fast graph for Aflac. As you can see here, the blue line is the normal PE and the orange line is the earnings growth. The black line represents the monthly end closing average price for the month. Um, and looking at this graph, I would like to see Aflac under the blue line, even though it's under the orange line. Um, but for this particular case versus Aflac history, I would like to see the company under the blue line, which I will find as a buying opportunity. Um, let's see the current fair value prices. As we see here, CFRA gave it a $100 and $101.56. My dividend discount model came out to $29.81. This is because of the low uh, dividend payout as well as the dividend growth and future growth. That's how I came with that number of $29.81. And averaging out the 5 different value, we get a fair price of $80.71. And currently, the price is at $86.39 in January 16th. It actually dropped almost 7% a few days ago because of fraud allegations with accounting and such. But the price actually picked up a couple percentage. Even though with that 7% drop, the stock is still overvalued by 7%. I currently recommend it as a hold. I would like to own more shares of Aflac, but not at this price. I would like to see it around the low 70s, maybe mid 60s before I even consider buying shares because of the very low dividend growth rate as well as the low dividend yield. Um, however, I do. They still have plenty of room with a low payout ratio to continue growing the dividends at a decent inflation rate of 3%. Hopefully, maybe even 4% going forward. But I'd see them growing it between 3 and 4%. Um, so if you agree with this analysis or don't, please leave a comment below and tell me why. If you like the video, leave a comment below and make sure to subscribe and hit the notification bell to be notified of my next stock analysis video. Thank you for watching. Make sure to visit my website, fiscalvoyage.com, where you can see my portfolio and see other things that are going on in the investment world. Thanks again, guys. Thank you for watching.